Good morning. It's Signal Centre Talking Bull. We're live. It's Taff and Steve this morning. Wednesday, the 15th, are we? Yeah, we're Wednesday.
Yep.
Oh, sorry, we're not Wednesday the 15th. We're
It's Thursday.
the 15th.
Thursday the 15th. Yeah.
Everything's falling apart without Joe here in control.
Yeah.
But we'll hopefully crack on through the show. Look at the first of all the news headlines. Drill down into some technicals that we can look at, and also then we'll talk about the gun to head and calendar. So let's take a look at the headlines and make sure that I absolutely know what I'm talking about. So the latest news headlines: US producer prices declined 0.1% for August after a revised 0.4% decline the previous month, which was in line with expectations, with the annual increase slowing to 8.7 from 9.8. Core prices increased 0.4% and slightly above expectation, with the annual increase slowing slightly to 7.3 from 7.1 in July. Data maintained expectations that pressure from global supply chains was easing, but there was still also some important reservations that underlying inflation pressures remained strong. EU Commission President von der Leyen stated that the EU had to acknowledge a new reality of higher public debt, with proposals for additional spending of 140 billion euros for member states to tackle the energy crisis. After sharp losses on Tuesday, Wall Street indices managed to stabilize on Wednesday, although buying interest remained notably subdued as higher yields continued to sap underlying support. Overall risk appetite attempted to stabilize, but conditions remained fragile, which maintained the underlying dollar demand. Finance Minister Suzuki stated that the ministry will not pre-announce any intervention in the forex market, stated the government was watching the situation with a sense of urgency. A senior LDP official, however, stated that the intervention would be limited to stopping steeper yen falls, which dampened expectations that there would be any effort to strengthen the Japanese currency, and the yen lost ground again. The Australian unemployment report came out. That is edged higher to 3.5% from 3.4 previously, compared with the expectations of an unchanged rate, while the employment increase of 33,500 was slightly below expectations. So that's pretty much it from the news headlines perspective. We're going to dive into some charts now. And first of all, we're going to start with cryptos, taking a look at what's going on in that crypto world. Let me share my screen, and we can see we're at a major support level. Now, we will be able to see this support level across a number of assets, and they are all dollar-based. This dollar strength has led to this breakdown in prices for assets priced against the dollar, and we're seeing a real test of support now around about this 17,600 to 20,000 level in cryptos, in Bitcoin. Now, if we remember all the way back in 2017, we made an all-time high around about the 20,000 level before a huge sell-off back down to 3,000. So a huge reversal there. We've seen an even bigger reversal from the highs. 69,000 is the high. We're all the way back down to around about 20,000 and under pressure this week. Let's take a look at the breakdown. A couple of days ago, we saw a big bearish outside candle, and this was followed by indecision yesterday, where prices just remained subdued, stabilized around the lows. We're on the back foot this morning, trading just around 20,000. And really do expect further downside to continue. The 4-hour chart gives us a couple of levels to watch. The low, 19,635, the high, 20,500. And after this sell-off here, normally technical analysis tells us that there's a more chance of a further move lower as we set up this bearish pennant flag formation. So I'm going to hand over to Taff now. He's going to take a look at oil and gold on the commodity side before I dive back into others. So take it away, Taff.
All right. Thank you, Steve. So as Steve mentioned, the dollar strength is just taking every commodity and every other asset down with it. Gold is on we're testing this this demand zone here. This was tested back in August 21, and we bounced. We had another test here in March 21, same month, and then it bounced again. We tested recently in July 22, and we bounced, and then we seem to be testing it again. Are we going to break? Time will tell if we'll break it. This is on the daily. It looks very menacing, this candle. This is on the daily. If we go to the intraday, um, intraday. Remember yesterday I mentioned that this could be a bearish flag of some sort, and we broke it. This is yesterday's high here. Price just came down, tested yesterday's high, which is 1707, and then just went straight down and broke the channel boundary here. And then we tested it again with this indecision candle here, and then we seem to be just pouring all the way down. If this bearish flag plays out in the long run, I'm looking at the high here to where it starts and then to where we broke out here down to around 1610, 1611. But that's probably still a long way. For today, I'm looking to just sell any rallies that we have targeting first support, which is 1680, and then my second support is around 1671. So I think it's going to be a pretty bearish day for gold today. So any pops, I'm just going to short right into all those rallies. That's
Yeah,
gold.
nice. I was going to say, Taff, I'll just show my my gold chart, which I've got on the weekly basis, and really
Yeah.
sort of like give an indication. This is where 2015 we formed this swing low, had
All
this
right.
extended rally right up. We've
Mhm.
potentially forming a double top. We saw the two spikes up to the all-time highs at 2075, 2070 in March this year.
If we break
And
that,
this, yeah, if we break
yeah,
this,
if we
we
break
just have
that,
a,
that's
yeah, good night, Vienna. This is the type of levels where we'll be targeting. Um, yeah, it sort of doesn't look good. Let me just redraw that.
sure.
So this would be a,
Do you want to just increase it a bit?
yeah, can you see it?
Yeah. Yeah. Cool. Yeah. That's good now.
So you're looking at the sort of like the measured move target for this double top formation would be around about 1279, 1280, which is a 78.6% fib. Now I think before that we've got some decent Fibonacci retracement levels to targets 1440, 1560, and as Taff mentioned, 1610 on a shorter term basis. But yeah, this sort of like wouldn't be. I don't think if we continue to see dollar strength, I think it's inevitable. It just feels it's just a case of timing
It's
when this will happen. I mean, the lowest close we've had on a weekly basis since June 2020. We're
yeah.
getting close to that on a weekly basis. So that was a close at 1685. We bounced the following week. So really, next couple of weeks, I think is crucial, Taff, like you said.
Yeah. Well, next week in particular, when if the Fed comes out and does that hike,
Yeah, yeah,
I
yeah.
think we're going to see a lot of volatility in the markets there. But I don't really see the dollar strength, subsiding anytime soon.
No,
It's
no
it's
signs
it's
of it.
no signs of it. I think it's just going to keep going up and up and up. So yeah, so gold bearish on an intraday. Looking to probably sell any rallies that we have. It'll be good if we test again probably this boundary, but any rallies just short into that. And then on crude oil, uh, remember I talked about this baseline resistance here. Price came again yesterday, tested it, and just couldn't penetrate. It seems to be quite a good resistance. But the candle was quite it's a green candle, so there was a lot of momentum in there. If we zoom down on the intraday and see what exactly happened there, again we see that bullish inverse head and shoulders here that we talked about, and I was quite skeptical um, of this formation just going to completion because of obviously the dollar strength and that baseline resistance. If you see this first resistance that I noted out, that's the baseline resistance on the daily, and price came and lo and behold, it rejected it, and we seem to be going down again today. I would again look to sell rallies. Any rallies that we have on crude oil. I'm quite bearish on crude oil. So I would, if we retest this 89.43 level and then come down again, it'll be good. Uh, it'll be good. My first support again is 86.05. We didn't break it yesterday. We could be playing right in between the 89.43 and 86.04 today. We could be playing right in between here, or we could pop up to 92. We could pop up to 92 and then break down again from 92. I don't see price going all the way above 92 today. I think this is pretty much the range. This one here and the 89 and the 92 range. So I'm looking to sell any rallies that we see of particular importance. I think is I think Steve will talk about this. I think on an intraday basis, I think we're looking at this 110 here for the dollar potentially making, probably it could test here and then come down again. We're still in strength, but then it could come down. It could test this 110 and then come down. So that will affect our crude oil in terms of the on an intraday basis. So if the dollar comes down temporarily, then we could probably pop up to 92. Yeah, so I think that's it. So I'm looking to just short any rallies that we have on crude oil and on gold. Thank you, Steve.
Thanks, mate. Yeah, on that crude oil, yeah, just
Mm,
that's a nice looking inverse head and shoulders formation, but
mm.
it has to break the neckline.
It
So
has to, yeah.
until it does that, we've got to pretty much ignore it.
Mm,
The chart I've just showing is a longer term chart on the dollar index. Obviously, this is going back to 2008 financial crisis, the wobbly time to 2011. We formed a double bottom here, and when we broke the
mm.
neckline, the measured move target was 112. We're not far away from that now.
Yeah, we're close. We're
After, I
close.
mean,
Yeah,
it's taken us 11 years to play
yeah,
out.
but we're very close.
But in the meantime, we formed another double bottom, and this is like intermarket double bottom. But if you look at it from, it was quite significant at the time from 2016, the lows in February 2018, and we got a revisit at the start of the 2021. And again, we've broken up through this neckline and this significant swing high here. So 103 for us was a major break. We came back, we retested.
Tested it, then
At 101 we got down to, and then we've pushed higher. So for
pop.
me, the measured move target for this is around just short of the 120 area, which we saw. We haven't seen levels like that since 2001. So
Wow.
it wouldn't be surprised if we do sort of like get up there, and potentially that could be a really big inverse head and shoulders from the
Hmm.
164 high. Imagine that.
Yeah,
Dread to think what the world would look like then,
yeah,
but
yeah.
maybe whether we'll be about to see it or not, I don't know. This is a long term play, but anyway, that's the dollar index, as Taff said. Just on that sort of basis. Let me drill down to the daily chart, see what's going on in the major pairs. We saw a little bit of to and fro in yesterday. Not a lot going on. Bit of a doji, indecisive candles. Finished slightly higher in the day, but we've given up those gains already this morning. So we're trading around the support at 99.60. A break of there could open up another assault down at the 98.65 level. Resistance coming in the shape of just around about the parity level on dollar index. Sorry, euro dollar. Cable, similar sort of price action, although we had a bit of a better rally yesterday. We've got potential maybe for a bit of an inverse head and shoulders or a double bottom type formation, but a long way to go before we even consider that. Again, we're on the back foot this morning with this dollar strength, and support level really coming in around about that swing low of yesterday, 114.82. Below that, we've got 114.10 to consider. Well, 114 level, we'll call it. And dollar yen, we can see that we've got this little bit of a scenario where we've got potential for a very short term, very intraday levels of a double bottom formation ready for the extension higher, or potentially have we got this double top formation forming. At the moment, without dollar index showing any signs of slowing down, then I've got to favour the upside. As Taff mentioned, next week we've got the central bank results out. We've got the Fed coming out first of all in the week, this could definitely lead to a bit of a break high, especially if they go large on the expected rate hike. There is rumors, or there's like certain notes saying we could potentially get a 1% hike, but 75 basis points is
more
the
likely.
more realistic
Yeah.
option there. Finally, have a little look at Aussie dollar as well. This is very much a commodity-based asset, and commodities are under pressure. We've got quite a decent level here, 66.90. I'll break it down, break it out to a weekly chart, see what it looks like here. We had this head and shoulders formation. It was a complex formation which formed a second shoulder, and yeah, we can sort of like say that this played out pretty nicely. We even got the breakthrough, we got the retest higher, which overextended on the upside, but now we're trading around that support level, around about the 66.80. We're not far away from that. The measured move target for that head and shoulders formation actually would be probably down here around about the 78.6, around about the 60-cent level. So definitely one to think about if you're looking at commodities or the dollar index. Taking a look at indices, and again, let's take a look at the daily chart. We saw a little bit of a recovery yesterday, although we managed to post the lowest prices we've seen since 15th of July, but we rallied back quite hard and formed a bit of a bullish hammer on the Dow. The Nasdaq didn't quite get down to them sort of lows. We still got support coming in at 11,926. And similar for the S&Ps, support coming in at 3,887, a little bit of a bullish hammer there. So a little bit mixed over there, but hoping for a little bit of a reaction rally. Yeah, we'll see how that plays out today. Looking at the DAX again, pretty indecisive price action yesterday, managed to spike a lot lower, got down to 12,955, support came in, and we saw a bounce. Not really a lot going on this morning either in DAX. We've got support coming in around about just above the 13,000 level, but maybe potential for a little bit of relief rally after that bearish outside candle. But again, I'm sort of in Taft's camp thinking about most of these assets. I'd be preferring to sell rallies. One market that I like to look at as well, I think is a great indicator, is the China 50. We saw this head and shoulders type formation forming. We saw the break of the neckline, which came in around about the 14,500. We saw this swing back, pull back higher. A retest got up to 15,000, so extended over that 14,500. But we've been one way since, so we could actually maybe draw a basically a trend line in, which takes in some significant points. We've got 1, 2, 3, 4, 5, half a dozen sort of like support points. We haven't broken below this trend line as yet, but doesn't feel like it's far away. A break of that trend line opens up the downside on China 50. Pretty much have we covered everything? I think we've gone through everything.
Yeah.
We seem to be getting more and more efficient, Taff. So
yeah, our time is really on point.
Yeah, Joe Who. So we're going to the gun to the head challenge. We've got this is part of the show where we both pick a trade idea. We enter at market. We have a target and a stop of at least 2-to-1 risk reward ratio, and we post these on our TradingView platform. And we are if we don't hit the stopper target, we close the trade automatically at 9 o'clock. And we link this to a spreadsheet which has shown some decent performance over the sort of 2-3 years. Well, I think it's 3 years we've been doing this, which is incredible. So, Taff, I don't know if you've got anything lined up.
Yeah, I was just
Looks
looking
like you're
at
putting
one.
something together.
Yeah,
You're working
yeah.
your magic there.
So yeah. So I'm looking at New Zealand Swiss franc. I was looking at price. What happened to price yesterday? We just dropped down, and then we seem to be bottoming out here with this little price action that we saw yesterday. So I'm looking to just play the correction at market, obviously. I'll play the correction at market, targeting 5870. probably won't go all the way up there, but then I'm sure it'll correct up somehow. So I'm playing at market, and then my stop, I'm just trying to put it just slightly. Okay, let me just
You trying to get it slightly below that swing low, aren't you?
yeah, just slightly below there, but then also keep my risk reward in good. Yeah, okay. This seems to be all right. Yeah, so I'll play this. I'm playing the New Zealand Swiss franc at market 5784. I'm targeting 58.5870, and my stop is at 0.5749. Yeah,
Excellent. Thanks, buddy.
cool. All right.
I'm going to look at Bitcoin today. As I've said, weekly chart bearish, daily chart bearish, 4-hour chart not looking good either. This big flagpole we've got, it's a bit of a mess. It's not quite a flag or a pennant or whatever. If anything, you could say, oh, is this potentially a inverse head and shoulders formation? But I'm going to sell into that strength now. As we've seen a nice little rally in this last hour, because it's a good risk reward trade idea. So I'm getting short at 20,334. I can place a stop 20,834, which is that's a little bit higher than I really wanted to, but really looking for a 3-to-1 risk-reward ratio. I know this is
Nice.
potentially this is a bit tricky for just in this day, but if we do manage to get a break of the 19,626 and a bit more dollar strength, we could see the downside opening up. But I've given it a little bit of I've sort of like erred on the side of caution here. I know what the spikes are like in this Bitcoin, but there is the swing high we got from the 14th of September. And that's yesterday at 2 o'clock, and I'm trying to place a stop a little bit above that. So that's my trade idea: selling Bitcoin at market and targeting at 18,834 with a 20,834 stop.
Nice, man.
Excellent. So we'll get those posted onto the platform so you can take a look at them and see how we've done previously as well. Looking at what's coming up. Day ahead, US retail sales at 1:30. That'll be interesting. Jobless claims at 1:30. Empire Manufacturing Index at 1:30. Overnight, we got UK retail sales. Well, tomorrow morning, 7 o'clock British Summer Time. Key events over the next week. Obviously, as we mentioned, the monetary policy decisions from the major central banks. Although I don't see ECB in there. Maybe theirs isn't next week, but 21st next week, we got the Fed, Bank of Japan, Swiss National Bank, and Bank of England all on the 22nd. So it should be an interesting week. Yeah, big volatile week for us next week.
Yeah.
Excellent. So thanks for joining us. I hope you've enjoyed it and look forward to catching up with you again tomorrow. Take care.
Bye.